Hello everyone and welcome back to my YouTube channel. So today we're going to be analyzing EURUSD top-down analysis, right? And yes, so I already looked at this just this evening, and I want to share with you guys how I actually see this today and what we can actually expect in the next coming days from Monday to Friday once again. So from the weekly time frame, we can see that we actually have a very nice, kind of impulsive and then corrective nature of the market. Let me change this. Yes, corrective nature of the market, which kind of seems weird, but yeah, it's cool. But apart from that, you can see that when the market did that, we had a low, a high, right? And anytime we are looking at the market, we want to see the market hitting higher highs and higher lows. Okay, that's how the market moves, right? So from here, the market created a low and a high. That made a new low, breaking the previous low, then created a new high. We couldn't break the new one, confirming this as a very strong low. Now we went to a new low, another high, low, then a high, another low, a high, right? That's around this area. Because so let's pick this one as our high. Then we had a new low, which is this particular one right here. After that low came, we had a break of structure. So, and the break of structure was just this particular view here. So let's take this as our high and this being our break of structure. Or probably let's shift to this, right? But I'll consider this one because this is what has actually uh, caused the break. Let me say caused the low, and then has been considered a low for me when it comes to the price action I can see right now, because this was a liquidity taken when price came took this particular price. So when you look closely, you see that price broke this low, then this became an order block, and then liquidity lying down here, price came down and then shot all the way to the downside, right? Hitting the target of the lows. So with this, now look at what is happening. After price did this messy thing, it actually created a low here, then made a little bit of consolidation before moving to the upside, right? And we all know that market conditions always favors what? The strong momentum. So look at how this thing has actually moved. Just look at this. So price moved in a very slow but strong way, breaking the previous structure. Now we had this one as our what? As our break of structure. Let's look at the market once again. So this particular one broke the market structure, and what caused this impulse to also break this previous one is this particular order block here. Hence, let's organize this and actually highlight this particular one as our new order block. I would have liked to take this particular one, but I will just pick this as my new order block, and then this as where I actually pick. But so let's reset my charts and see what has happened. So now you can see when price did that, we can actually see price. We are waiting for price to come to this particular order block and then push back to the upside. But currently the price is still in a very strong downtrend, right? In a very strong bear momentum. You can see price has pushed down and went to the upside. We are still consolidating to see where we will actually reach before we fall down once again, right? But when price went up, we had a break of structure previously on the previous months, that's in years, actually that's in 2016. And this whole thing is a very big order block on the monthly time frame. That's hence I'm looking at the monthly side of the market instead of what the weekly, right? In this case, that's why I'm highlighting the whole thing. So now, when price came here, you can see price did a little bit of mitigation, a push, another what break to the downside, confirming this as a break, breaking this, and now finally we are struggling to break this particular consolidation right here. Why? Because we have a lot of momentum here, and yes, it is just there, right? It's there. So we are overall in a very ranging market. Okay, that's the clear thing I would say. We are overall in a what ranging market. So now we've been in overall in the ranging market. We need to see price breaking either of this, right? Either this or this, and we know that we are overall in a particular trend we can follow. Because currently price has broken this, right? And then also broken this, making this whole thing our, let me see, inverted head and shoulder. Hence, we see we have this and that, right? Now, price hasn't broken this, and price hasn't broken this, yes. So now let's go to the previous what structure. So we are in this range at the moment. Price hasn't neither broken this nor broken this. So hence we have not had a strong area to choose as to whether we are what bears or bulls. Let's look at this once again. Let's look at this particular one on the daily time frame. The daily time frame will give us another thing, right? So which I would like to show you. On the daily time frame, we have a series of breaks, right? And we have our range from here. Our range starts from daily time frame from here, that is here and then there. And we haven't broken anywhere yet, really. Now let's move to the next to the next point. Now in the next point, you can see we have a range from here to here. Price hasn't broken any particular range yet. Hence, we are seeing this particular bear movement. Let's see how it would react to this area, and then we see how it will either push up or break, and then we see it rallying to the downside. Let's go to the 4 hour. On the 4 hour time frame, we have a lot of other blocks we can highlight, right? So I have another block right here that is very good, and I have another block actually below me which hasn't taken liquidity yet. Okay, which I'll consider this. So yes, I'll just consider this as another area. And now let's go to the 2 hour. The 2 hour is just places where I really find my other blocks to see which one I can take. Right, this is now the place I would like to take my entry. Though there's a lot of liquidity below this particular one, but I will not call that, or I will not actually take this serious because I haven't seen any bit of structure at the moment. But yes, so the market has broken this one. We have had a high. Now this is our potential low, then go back to the upside. But we haven't confirmed it yet. Let's wait to see how the market behaves. On the 1 hour time frame, we just see a series. We just see series of markets. But when you look at the 4 hour or the daily time frame, we are still in a downtrend. Okay, because we've broken the structure and we are on a very strong demand, supply area on this. Okay, if you can't see that, but you can see this particular one. So we are still in a very strong supply area. So we need to be very careful on how we take this. And this was hence liquidity, because price can just move from here and start. You will probably go down, go up, and then shoot to the downside without your notice. Yes, that is what price simply in mind. Sometimes that's so let's know how we follow price. Perhaps the market hasn't actually finished doing its movement yet. So let's see in the 30 minutes. So in the 30 minutes, what I will say around this address is that we haven't had any kind of bullish momentum. You can see I have a low and another low, right, and another low here. Now we have a high around this area, and this low hasn't been broken. It has been cemented by this high. So let's see how this actually works. So will price come down, right? Will price come down and tap into this and move back to the upside, or it will just move from here, or it will just break to the downside? We don't know yet, right? We don't know yet. So let's wait. As always, the market is reactive, not predictive. So let's be careful and then let's trade safe and know how the market reacts and know what we are looking for the market and know how we enter the market and how we come out of the market. All this counts, and let's make sure we don't violate the market rules. Else we will be violated. Okay. So see you guys in my next episode. Thank you.